Ondas Holdings Inc. is currently trading at 6.39 USD, showing a gain of 0.12, which translates to a 1.92% upward move for the session. When you watch the ticker tape today, that green percentage point might look like standard market noise or just another day of volatility in the small-cap tech sector. But if you look closer at the order flow, you will see a tension building that completely contradicts the quiet surface level of the chart. The expectation for a company like Ondas has historically been that it is a speculative science project, a company with interesting patents for drone tech and rail networks, but very little execution to back it up, leaving investors constantly waiting for a payday that never comes. However, the reality hitting the market right now, specifically with today's price action holding firmly above the $6 mark, is that the narrative has fundamentally fractured. We are no longer looking at a speculative bet, but rather a company that just posted a 580% year-over-year revenue surge in its third quarter earnings, fundamentally changing the valuation models that retail and institutional investors have been using for the last 2 years. The gap between that old penny stock expectation and this new defense infrastructure reality is where the profit potential and the risk currently lives. And that is exactly why we are seeing this tug-of-war in the price today. If you are sitting there with your Robinhood app open, or perhaps monitoring your positions on SoFi Investing, you might be tempted to look at the 1.92% gain and think the move is over. But the intraday volume tells a different story. We are seeing a significant amount of accumulation happening in the first 2 hours of trading, which is unusual for a Saturday session unless the market is pricing in something immediate. The volume spikes we are seeing on the 15-minute charts suggest that larger players are stepping in to support the price every time it dips below $6.35, creating a floor that retail traders are now surfing off of. It is fascinating to watch because usually on platforms like interactive brokers, you would see high-frequency algorithms fading this kind of gap up, betting that the excitement will fade by lunch. Instead, the bid side of the order book is stacking up, which often implies that someone knows something or that the digestion of the recent Q3 data is finally hitting the institutional desks. This isn't just about a single day of green. It is about the market realizing that the forthcoming shareholder meeting, which has been postponed to November 25, just 3 days from now, could be a pivotal moment for the company's capital structure. When a company postpones a meeting to solicit more votes, it creates a vacuum of uncertainty, and usually stocks drop on that news. The fact that ONDS is green today, trading up nearly 2%, tells you that the market believes the outcome of next Tuesday's meeting will be favorable, or at least that the smart money is positioning for a breakout rather than a breakdown. Let's take a step back and look at the broader picture, because if you are comparing this to a blue chip like Apple stock or the momentum we often see in Nvidia stock, you're going to miss the nuance of what is happening here. With the megacaps, everyone has the same information at the same time. With a company like Ondas, the edge comes from understanding the regulatory landscape that is shifting under our feet. Right now, we are less than a month away from the December 23, 2025 deadline for the NDAA audit on DJI drones. For years, DJI has dominated the drone market, but the geopolitical winds have shifted violently. The Unleashing American Drone Dominance Executive Order signed earlier this year has effectively put a target on foreign manufactured drones, creating a massive vacuum in the commercial and defense sectors. Ondas is not just a bystander here. With their recent acquisitions of Sentrycs and 4M Defense, they have positioned themselves as one of the few American-owned alternatives that can actually scale. When you look at Schwab Intelligent Portfolios or other automated online investment tools, they often miss these regulatory catalysts because they are looking at trailing 12-month earnings. But if you are engaging in self-investing, you have the luxury of looking forward. The market is starting to price in the possibility that come January 2026, a massive chunk of the U.S. drone fleet will need to be replaced or upgraded to comply with new federal standards, and Ondas is sitting there with a backlog that has already grown to over $22 million. This connects directly to the Q3 earnings report we just saw, which is the primary engine driving this stock from its lows to this $6.39 level. Revenue coming in at $10.1 million versus $1.48 million a year ago is not a statistical error. It is a sign of operational maturity. The skeptics, and there are many on the message boards, will point out that operating expenses also ballooned to $18 million. That is a fair criticism, and if you are using Fidelity wealth management principles, you might look at the cash burn and hesitate. However, in the growth phase of a hardware-heavy defense company, you rarely see profitability before scale. The question you have to ask yourself is whether that spend is wasted or if it is building the moat. The acquisition of 4M Defense, which specializes in smart demining and subsurface intelligence, was a strategic masterstroke that expanded their total addressable market overnight. We are sadly living in a world where demining and unexploded ordnance clearance is a growth industry, specifically in Europe and the Middle East. By integrating 4M's terrestrial intelligence with Ondas's aerial platforms, they are offering a full-stack solution that governments are desperate for. This is why you are seeing institutions like Hood River Capital and Goldman Sachs filing 13Gs showing increased stakes. They aren't buying because they like burning cash, they're buying because they see the defense contracts lining up in the backlog. It is also crucial to talk about the other side of the house, Ondas Networks and the rail business. While the drone stuff gets all the headlines because it feels like Tesla stock in the early days, exciting, futuristic, volatile, the rail business is the boring, steady cash cow that justifies the long-term hold. The North American rail network is currently undergoing a massive communications upgrade. The legacy 900 MHz networks are being transitioned to the new .16 standard, and Ondas is the primary architect of this transition. We recently saw the Association of American Railroads Wireless Communications Committee formally declare .16 as the upgrade path for the legacy 160 MHz network. If you don't work in rail, that sounds like gibberish. If you do invest in infrastructure, you know that means Ondas has effectively locked in a monopoly on the technical standard for the next generation of rail comms. This is not about selling a widget once. It is about integrating a platform that Class 1 railroads will rely on for the next 20 years to prevent derailments and manage automated switching. When you use investing sites to screen for stocks, you often look for recurring revenue. The rail contracts are the definition of sticky revenue. Once a railroad installs your network, they're not ripping it out next year. It creates a floor for the stock price that speculative drone companies simply don't have. Now, let's return to the price action we are seeing right now, at $6.39. Why isn't the stock at $10 if the news is so good? The answer lies in the dilution fears and the upcoming shareholder meeting. The company has raised significant capital recently, around $200 million in equity offerings, to fund these acquisitions. Every time a company issues new shares, it slices the pie thinner for existing holders. This is the classic expectation versus reality conflict. The expectation is that dilution crushes the stock price. The reality is that if the capital raised generates returns higher than the cost of that capital, the stock eventually soars. The market is currently trying to decide if Ondas is burning that cash or investing it. The $10.1 million revenue print suggests they are investing it effectively. However, traders using Robinhood stock trading accounts are often skittish about secondary offerings, which keeps a lid on the price. This creates a compression pattern on the chart, where the price coils tighter and tighter until it breaks. We are currently near the top of that coil. If the November 25 meeting goes smoothly and the company clarifies its capital strategy for 2026 without announcing further immediate dilution, we could see a relief rally that pushes this well past the $7 resistance level. I want you to pause for a second and think about your own portfolio. When you look for investment help or read through Fidelity brokerage research notes, how often do you see analysts covering these microcap industrial plays with deep diligence? Rarely. They focus on the big names. This gives the individual investor an advantage if they are willing to do the reading. The institutional ownership in ONDS has jumped significantly, with funds like Jane Street increasing their allocation by massive percentages in the last quarter. When the smart money and the quant funds start loading the boat on a $6 stock, it's usually because their models are picking up on a discrepancy that the retail public hasn't fully priced in yet. They are likely looking at the backlog growth from $20 million to potentially much higher as the new acquisitions consolidate, and realizing that ONDS is trading at a multiple that doesn't reflect its 2026 earnings potential. If you are using SoFi Active Investing to manage your trades, you need to watch the